In a word, improved. I think there's certainly improved sentiment towards the sector at the moment, but that's coming off an extremely low base over the last couple of years. The simple answer is about improved mineral prices. So clearly, investment boards, credit boards, etc., feel a bit more generous towards investment and capex when they've been supported by increased prices. So we're trying not to get over exuberant about it, but certainly if there are underlying prices that are improved, that certainly makes earnings a lot better. In terms of China at the moment, if the growth rate's at 4 to 5%, we must always remember, you're still dealing with a gigantic GDP, $8 billion of GDP, so even 4 to 5% growth on that is enormous. So as it stands today, roughly 50% of the mineral complex that we export goes to China. And clearly, if the sentiment is pretty positive there, that follows through to South Africa. And then more specifically, I think it is about, the steelmaking industry. So they've curbed their domestic production, and that clearly has an influence on, import of iron ore, manganese, etc. And those are two big components of South Africa's export basket. I think I'd start with what is not great. Platinum at the moment is probably level pegging at just below $1,000 an ounce, and maybe it'll go to about 10, 1100. That's certainly RMB's view that that's what we should be looking at. Gold is very much dependent on what happens in the US. It's very much sentiment driven rather than industrial, supply and demand ratio. So we're a little bit more bullish on gold than we are on platinum. But certainly, minerals that are involved with the steel making process, we think are going to be pretty okay for this year. The kind of growth rate that we're looking at is off a low base. You're quite right in saying abysmal in the last 2 years or so. We're negative growth 4 or 5%. So, in effect, that the economy the mining economy has contracted. So we're forecasting as RMB probably about 2.5% to 3% growth. So it's not stellar growth, double-digit growth, etc. But once again, a caution about coming off a low base. But certainly, I think it's important that we are talking about growth within the sector, and certainly that has a huge influence in terms of possible job creation. Clearly, what we worry about is mining legislation or unclear mining legislation. Certainly, if you're the CEO or chairman of a board, and to commit billions of rands, multi-year projects, etc., is very difficult in the context of uncertain mining legislation. So our view and our hope is that both the legislature, government, and industry will get closer together, and hopefully not fight a proxy war via the media. But that for us would be, if we had to have one thing that we say, could get a lot better, would be a clearer legislation within the industry. It has got tougher over the last couple of years in terms of deploying our balance sheet. Something that we're very proud of is the fact that, our balance sheet commitment has been more or less the same as it was, 2-3 years ago. But having said that, it's been extremely tough. As you can imagine. So I wouldn't suggest in terms of more stringent measures. We certainly spoke about the mining legislation, etc. That's something that we're keenly aware of and discuss at each and every transaction. So if I look over the last 2 years, the last year in particular, 2016 was very tough for us. But we're keenly aware where we are versus our competitors and our continued commitment to the sector. So if I look over the last 4 or 5 years, we've been pretty steady. We haven't been overly aggressive, and certainly we haven't withdrawn support from the sector. I'm very much aware of some of our competitors that I think that have withdrawn, somewhat from the sector, and that's not been the case with ourselves. So I think we've been quite a steady player and committed player to the sector. We would like to think that mining companies, it's a harsh statement from our side, hopefully have learned their lessons, not being over exuberant, too aggressive in terms of deal flow. I certainly can remember 4 or 5 years ago, it was all about the size of your company and the amount of ounces that you produced, etc. I think there's been a sea change in terms of CEOs and boards being far more conservative. I think they're looking after their balance sheets, making sure that projects that they invest in and companies that they invest in create earnings for their shareholders rather than being a bit more speculative. So if conservative is the right word, I think that's what we see coming into the mix. Certainly in South Africa, I mean, there's been a lot of pain, as you said earlier, job losses, etc. Definitely companies have gone into liquidation, certainly business rescue, etc. And I think that's the exception rather than the norm. We'd like to think as RMB, the majority of our clients, they've survived a very tough time, and I think that's hopefully a hallmark of good companies, good balance sheets, and good management teams.